Fed statements and the bank's stress tests ignite markets. European stocks extend their biggest gains in 6 weeks. Do investors sense rates rising as they cross key inflection points? I'm Taylor Schranz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Stephanie Link, Director of Research at theStreet, and together we bring you the morning call.
Finally, Fed out of the way,
Yeah.
Some of the bank stress tests out of the way. I think the market's treating it well. What do you think as far as some of the info that started rolling out?
Yeah, I mean, I think a lot of it was expected. It was very good news, though, that these companies can now release all this kind of shareholder value that we've been waiting for. And I think that more importantly, underlying all of this is that the economy is better, so the underlying fundamentals for banks still remains attractive.
So besides the banks, we've been seeing it in the job market. People want to start making excuses. I know on Friday was very important. Everyone saw the revisions upward. So every time we've gotten a positive announcement in the jobs market, everyone's like, oh, well, they're just going to revise it lower. It's just they're cooking the books. But I think between the Fed, between the bank stress tests, between some of the data, people are finally saying, you know what? We are moving in the right direction. Stop being a hater. Start approaching the market with a plan. Get involved. And as we go higher, unfortunately, some people start to chase, and you never want to chase the market. But if you enter correctly, people are being rewarded right now as most of the indices are all at new highs.
Well, I think last year what happened was a lot of people focused on the industrials as the economy and as the economic data points started to improve. But this year, I think when you do get better jobs, to your point, and then you get a stabilization in housing, you need those two metrics to have banks go. And those two metrics are going in the right direction.
Right, and then when bank stocks go up, they're heavily in people's 401ks, people feel better. And if you look here how the market reacted yesterday, look at the chart of the S&P. If you look at the chart of the S&P, you finally had a really nice breakout. This has been the momentum trend that we've been talking about. We've been talking about how we've been trailing the 10-day the whole way up, not to fight it. You did get a small correction here, but if you remember, we measured the Fibonacci retracements, and I showed you from here to here. This was 25%. Okay, and then we wanted to see whether or not the bounce back would be potent to measure this type of movement to the downside, and it was potent. It took it back. So you had to switch gears if you were traded to get back long. Then yesterday we finally exploded above the 1378. If you were short, you had to cover. You had some decisions to make, and if you were long, you know what, you could have added for cash flow, and now you let it work out for you a little bit.
And I think that it's very positive to have the market obviously continuing to go up, but it's been kind of like a slow and steady upward move, right? And so, to me, when you look at that chart, it's a little intimidating because it's up so much. But again, it's the fundamentals support higher earnings, valuations still remain very attractive, and again, it's the economy that's getting better.
And what's interesting is that last year things happened really quickly. This year it's been slow, It's been methodical, so people have no excuses. You saw some groups rotating, you saw stocks breaking out, you had time to get in. It wasn't like a rally that took place in 3 days and then nothing else happened. It's been slow and methodical. Now if we go back to this chart and we go even longer term, we need to start looking at some monthlies, which is good. That means some longer term guys that had a plan are getting rewarded. And we just took out this prior peak, which we talked about the importance there. And if you look here, this is 1404 to 1440. This is probably an area that we'll get to and pause, and then on that next correction, or if we get any type of corrective action, you start putting together a plan, you start approaching the market and stop just saying, you know what, I lost money 10 years ago, because there's a lot of money out there. We have stocks at historic highs. There's a lot of movement. And as far as even the banks, which has been a sector that you've been focusing on that had great movement, give me some of the secret sauce, which it hasn't been a secret because you've been telling us what to do.
Well, so like on the banks, we've liked JP Morgan and we've liked US Bancorp and American Express, also Prudential as kind of this backdoor way and getting into the financials as well. To me, JP Morgan just lagged the big five. That's why it was so compelling a couple of weeks ago. Even though it had a little bit of a move, it was still very cheap. And this is talk about a fortress balance sheet. So that one was that one was kind of like a no-brainer in a way. And I know you liked it from a technical basis as well.
Because it always just led. Every time the market would pull in, it would pull in the least. It would hold higher moving averages. So that gave us a relationship to watch. And I think you spoke about it in the 20s. And if you look here, this thing is on the move. So this is when it broke this downtrend. Here it consolidated the move off the lows, and this is when momentum came back. You could have bought it above 39, and then finally, look at this little day here. This might not have meant anything to you, but it meant a lot to me. You look right there, that was already at a higher high before the markets even decided, so that had to get you away from being bearish or short on the brain short term, and then pow, look at that beautiful move to 44. Arrest is due. As far as your USB, the stock not on the radar for traders, and it should have been. Look at this trade through 30. That's a nice move. If you go now to the monthly chart on USB, I think this has room to probably at least 35, and this could be one of the few banks that actually makes, I guess, like monthly highs versus just daily highs.
Yeah, this is a bank that even in the downturn, they were beating expectations. Their balance sheet is so strong. They continue to make acquisitions, and just their capital ratios have always been kind of the industry leader. So it's always traded a premium to the group as a result. And that is what I think has shied investors away, or maybe traders away, because it's not screamingly cheap, like the JP Morgan call was. So that's why this one is kind of fun to see it at least starting to do even better, and that we're getting rewarded.
Yeah, and again, as like a trading vehicle, even Goldman yesterday. I know it's been tricky. It's actually has my number for some reason, because of the false breakout. But finally, Goldman Sachs went yesterday. I was in here with Brittany. We talked about this little inside range here. If you look at it, again, we're trying to teach you technicals. It might not mean much to some of you out there, but as far as this little 3-day range, that's all you needed to know. Once it traded above this, what was this, 118.70, it ignited. You didn't know it was going to have a move like this, but if you're in the right place, right time, sometimes you get rewarded. And I know we were talking about the difference between Goldman Sachs and Morgan, and you like Goldman well above Morgan.
Yeah, I think that Goldman, well, first, the valuation still is very attractive, but I think that, Goldman is the industry leader, and while they're going through some management changes right now, I think that's actually going to lead to positive results down the road and more market share gains. And so, while people tend to gravitate to Morgan Stanley because of it's cheap, it's kind of cheap for a reason. It's kind of the number 2. And so why buy the number 2 when you can get the number 1 still at a discount to book value?
Well, I think people are chuckling today because Morgan Stanley came out and put Apple on its best idea list at historic highs. That's why sometimes these wirehouses get bad, reviews or slack because, where's the value added there? But that's besides the point. But last time we were here, we talked about American Express, and you raised a lot of good points. Like everyone's in love with MasterCard and Visa. Why not go off the beaten path and go with Amex with its value? Right,
and well, this is also a play on the consumer, the high-end consumer, which has continued to do well. If you look at a lot of the discretionary stocks, but it's also on corporate travel. So if you believe that the corporate environment is getting better, getting healthier, which I do, you're going to see these firms start to increase their travel budgets, and that plays right into American Express. And again, great balance sheet, and they had a positive announcement in terms of their buyback, after the regulators approved them.
And it responded yesterday. Yeah. Another wide range bar for Amex, pretty exciting. You look at the chart here. Okay, this also, you look at this relative uptrend here, never tested, came back in, tested support, gave you a bit of a double bottom right into support, it held where it was supposed to, ignited above this little range yesterday. Now, if it takes out this prior high here, you're going to see a nice move. You go to I would say you have to go to the monthly chart here too. You have to do this in a lot of spots. Next big area of resistance is going to be 60 to 65, and then always a pause there, and then you figure it out from there. But overall, great value there, and it can continue.
I'll take it.
So there's just value everywhere, and I don't want to be like this perma bull. We're not always like this. There are times when you have to be a bit more careful, but when the stock market is acting correctly and you see rotation, you see involvement, like we're going to talk about next with the cyclicals, you have to pay attention. We'll come right back to that after this commercial break.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
What's great about having Stephanie here is that she brings our attention to groups we would never have watched. We've always been like high beta tech junkies. We're always involved in the fastest moving stocks. And then when we started to get really involved, she started telling us about the industrials, about the cyclicals, about all groups that were not that sexy almost 6 months to a year ago.
Right.
And they've given us a lot more to do. And now the cyclicals has been a focus for you. What are a few of them that you're watching right now?
Yeah, so the first one, and one we don't own in the fund, is Cooper Industries. They're kind of a diversified industrial, but they actually were at a conference a couple of weeks ago, and they raised their guidance to the high end of the range for the first quarter because North America electrical business was stronger than expected. That means construction.
Right.
And we've been bullish on housing, but construction is also starting to improve too. So this is one that I think is still very viable. It's kind of lagged the group, and I like the management team a lot.
Okay, well, that coincides with the chart because yesterday it exploded through a nice channel. We love tight formation. So even as a trader in Cooper, you could have made money yesterday. So if you take a look here, you'll see a nice channel, right? This is nice sideways action, consolidating a big move, from this 54, which was a nice little buy area. Clean move to the upside, closing the highs, which is what a lot of traders like. And if you go, I guess, to the monthly chart now to see where it can go, wow, this one actually has been performing very well. It has this level in front of it. This high here for Cooper is what, 70? And then there's nothing to the left. So this has been rewarding investors, and at this particular point, it's showing a lot of relative strength.
Yeah, and it's one that we don't own, but it was certainly one that we would want to own if it does get a pullback. Our sidebar way of playing the Cooper news is Eaton. That we talked about that a lot, so didn't want to showcase that name so to speak.
Why not?
But
it's been performing. You're allowed.
Well, but it has an electrical business too, so I think, and especially in North America. So I think that if in fact you do want to play the Cooper news and don't maybe want to pay up for the Cooper, you could buy the Eaton.
Okay, there you go. And another stock, this stock actually has been on the radar because it's had crazy moves. Whirlpool, who would have thunk it? You look at the chart of this WHR, and it's traded like a tech stock. You go to the daily chart here, and you'll see, look at the size of this move, this gap up. That's why, remember we talk about gaps. If gaps don't get filled, they're powerful. And it gapped up here, had a nice move up, rested, went again, and now looks on the move again. It looks like this next spot is 80 to 85. What do you think of Whirlpool?
Yeah, it's hard to buy it looking at that chart just because it looks like it's just straight up. But this company is undergoing a massive restructuring, and I like massive restructurings because you don't have to necessarily depend on the macro to work. Although I do think housing is in a cyclical, secular bull market. Let me get that out. But I do think that this is a definite play on that theme, and I think margins are still very, very depressed. They're at like 3%, and I think that they can certainly go to the upper single digits over the next couple of years, and that's very positive and very powerful for earnings. So I think earnings actually are really understated, and the street is well below where management is guiding to. So nobody believes, and I just think you're going to have to chase it.
Well, that's good to know because a lot of my traders like to short this name because they're like, why is this doing this? This should be a slow, sluggish company and not moving to the upside. So I'm going to say, guys, just step back. And another name that you like that we trade from time to time is the LRCX.
Yes, Lam Research. And again, it's a name that, we like the semiconductor cycle, again, because of the macroeconomy and the underlying improvement there. But I like this because they're buying Novellus. And the deal closes in the second quarter. And when they close this deal, there are a ton of synergies that the two companies are going to see. And that will give you, kind of support for earnings. So again, we like the macro and we like what's going on internally.
Well, lately it's been on a streak, and if you look here, look technically, I want to show you something here. Look at LRCX. We talk about the red dog reversal, how to buy a dip. Well, here you go. Remember, we talk about if an outside day occurs where on a pullback, it was pulling back all the way from 45, came back, went through the low, closed strong, went back to low. That right there is your entry for this stock. Okay, and from there, you just had a 4-day methodical move. It just broke this downtrend. What I'd like to do is maybe see it go sideways around 42 for a bit, but as they absorb Novellus and they start getting the synergies, I don't see any reason why this can't take out the highs at some point this year, and that's at 45. But you just had a 5-day move. I would say try and accumulate it into this zone, and if it doesn't break below this zone, you might have to chase it there. I like what I'm seeing.
Yeah, like we were buying it at 39 to 40, kind of holding our nose a little bit on that one. But so we still like the cyclicals, as you know, but we also like some of the defensive stocks too. I know they're not in vogue exactly, but you have to have a balanced portfolio, and that's what we do at Action Alerts Plus. And so the next name is Energy Transfer Partners, ETP,
right.
And that company, it's a pipeline, MLP, it's a master limited partnership pipeline company that really is doing a great job at getting away from natural gas, getting more into liquids, really investing in their businesses, and the stock has lagged the group substantially last year, this year, and I think that the investments that they're making this year will actually lead to better returns next year. So I like it. I like the yield too.
Okay, well, this one I'm looking at right now, it hasn't gone yet. So some things it's good to have that's kind of like percolating. We talk about incubating trades, and right now this one's going sideways. If you look here and you believe the story, which looks like Stephanie does, so that means I have to believe it because she usually knows exactly what she's talking about, and here you go. Nice support, nice going sideways. It could ignite. This thing gets about 47.5. You then have 49, and then the highs are 50. So I would say you could be in a tier 1 in here, and as a trade above 47, it could continue.
Okay. That's good to know.
And now what about T?
Yeah, At&t is another kind of boring name, you know, and one that is not going to, you know, have a lot of beta. But again, it's a nice blend for your portfolio. I love the yield. The valuation is trading at about a 20% discount to Verizon, which makes no sense to me. People were totally obsessed with the spectrum issue with the company, and I think they are going to get additional spectrum. They're good until 2013 on 2014 on spectrum anyway. And in the meantime, you know, it's an Apple play, right? I mean, they're selling all the Apple products. So I like the valuation too.
I'm sorry, I just had like a little bit of cough attack. Thank you for that. But it's funny, as you say, there's no beta in T, or it's slow. Look at the chart here.
I know, it looks
nice,
right?
It totally changed character. If you look here, you see it go sideways. It broke above this 3071 into new highs. It looks really good. This looks more like it should have been a quick hit versus an investment, which just goes to show you that there's a lot of good things acting well, which takes us to the quick hits. I'm going to give it to Stephanie. You got to throw it at me. These quick hits mean quick. I can't be too long, so I'm going to try and be tidy.
All right, let's start with Apple.
Apple, for me, was a nice little pivot buy above this area. If you look right here at Apple, you will see it traded above this last pivot as an investment. Unbelievable. Closed strong. Excuse me. Again, I'm long overnight. I will be selling up $6, $7 on the open, because sometimes with quad witching coming up on Friday, they push these things. They try and get you to buy the 580s, 590s, the 600s. You know, it's with strikes, and then midweek they have a little bit of a pullback so they can collect some premium. I would not be buying the gap open if you're a short-term trader on Apple today.
That's a nice move. Again,
Yes.
you know, if you want to play the Apple way, Broadcom is pretty good. You know, I think that even Qualcomm. So, but I like Apple. It's
Yes.
just that,
Yeah,
you know.
I hear you.
All right, back to quick hits. Las Vegas Sands.
Las Vegas Sands was a buyable on that dip. I do think that it eclipses that 57. Once it takes that out, it's going to be on its way to 63, 65 this year. Hopefully bought the pullback, and now we'll look to see if there's any momentum there.
How about IBM? One of my favorites.
IBM, I have a love-hate relationship with. The IBM that I hold, and I've been trying to hold it, has been working out very well. The IBM that I try and buy on strength is something I complain about every day. But if you look at the chart here, unbelievable, right? We talked about this many times. This was that area that you could have bought for some momentum. I was buying tier 1 here above 195, gave you some action, and then it tried to do it again right here. And all in all, it held above each level. And now it's at new highs. I am long some IBM. I might have to get flatted today. I've been holding it longer. I haven't, 2-3 weeks for me is a long time. And at new highs, I might get rid of it today.
And maybe you want to take a look at Accenture, because that's actually in the same business and they're doing very well. They're both taking a share from Hewlett Packard. Okay, LinkedIn.
LinkedIn, I've been long since last week. I like the chart. I still think it has long to, room to go. Yesterday, I think there was some news that a lot of calls were being bought at 100, 105. If you look at the chart here, you'll see why I liked it. This is a nice pattern here. Look at this resistance, which we're coming right up to and knocking on the door. I started talking about it and tweeting about it right here when it crossed this descending trend line around 89. And then above 91.5, that was my next buy price. And now if it could clear this 95 and hold above it, there's really nothing in its way until where it came public. And if you look right there, here you go. I'll let you see it a little closer here. We're coming right up to that, and if people want a big valuation, for Facebook, the forces of will might be pushing this, and there's a big short interest in LinkedIn.
Okay, how about Baidu, the last one?
Baidu has been lagging, and Baidu, I started buying a little bit yesterday. It didn't act well until the end of the day because it's at a major downtrend. But at downtrends, I love, because if they get through on volume, you could actually see that they have nice moves in front of them. So if you look here on Baidu, you'll see exactly what I'm talking about. It's been controlled by this downtrend. So if you were short and every time it comes up and tests this downtrend and you were able to win, what happens when that changes and busts through? You have to change your setting. You have to switch gears. So for me, if we can get above 141, 142, I think shorts will cover, and I think it could be back on the move to 150, 155. So watch it very closely here. I think there's a trade setup.
Great. Those are all great. I like Baidu from a fundamental point of view, but I'll kind of keep an eye on what you're saying in terms of where to
we're at an action area right now,
yeah.
And it's failed a few times there. And the reason why I love it when it breaks through downtrends, because that's like a day one, and you can get some follow through moving forward. So now what I want to do is I want to close it up with something that took place yesterday. You heard a lot of people talking bonds, a lot of people talking yields, a lot of people talking interest rates possibly rising a lot sooner than the Fed says. The Fed says what? They're not going to do anything till 2014. And it seems like the market's sniffing out that they're not going to have control because the economy is getting better, that there might be a change here.
I think you have to always pay attention to what the bond market is saying. The bond market is the leading indicator of what to expect. Not always right, but certainly something to respect. And I think that it's the better U.S. economy. It's the better jobs, the better housing, the better manufacturing. It would kind of be a perfect world if we didn't have the global situation, what's going on. But for now, the U.S. is really in good shape, and perhaps maybe that's what the bond market is telling you, that they'll take away the emergency Fed action. Maybe they'll go to 25 to 50 bips, in terms of the policy from 0 to 25. But that's a big move.
Yes, and people are asking me how to trade it, and there are lots of ways to trade it. And I'm a Katanovkin technician. I'm not the most sophisticated guy out there. I won't be talking Aussie dollar versus this. I want to just make it clear cut. And as a trade, yesterday I got long the TBT. You could have shorted TLT or got long TBT. I know there's a lot of other ways to play it. So for me, I want to show you what I saw. If you look here, I'll get this out of your way. You see this big move down in the TBTs from 34 yesterday. It finally started to get above a key area. So for me, I'm not going to overthink it. I got long around 1970-ish, and I think that there's room here to about 22. If you wanted to take the other side of the trade, TLT, and you feel better as a short, this has started to round lower. It's below the moving averages. The price point, I think Kramer did an off the charts a few weeks back to get people ready for this trade if it ignites. Well, it's on its way. I think that this could get probably to at least the 110 area, which would be a nice trade. So just make sure, if you want to trade it in a way that makes sense to you. For me, again, unsophisticated guy that I am, I'm just going along the TBT, and I'm going to see if it can work out.
And actually, it makes me feel better about the banks, because the yield curve actually then starts to steepen just a little bit, and it doesn't need to steepen a lot to get a little bit better net interest income, net interest margin. That has been the issue for the banks. That is why the banks are trading where they are. So you get a little bit of lift there, and I think that those stocks still work.
And the moral of the story is you have to approach the market like a pro based on your time frame. We sent out a note yesterday saying, yesterday at new highs, you could be excited if you're a 401k investor with a monthly plan, putting money in every month. If that's what makes you comfortable, fine. If you're investing for like your child's education, you do a 529. You have the market work for you again. Every single month you do it over a longer period of time, it's going to work out. If you're a stock picker, we have stocks at historic highs. Whether it's a cyclical, which we showed you, a bank, whether it's Apple. So you could have been rewarded there. And then even as a momentum trader like me, who's trying to grow, who held positions for like 2 months, which has been hard for me, you could do it. But you're not going to have any of this done if you don't look at the stock market, if you don't educate yourself, if you don't use sites that could give you premium products like Real Money Pro, like T3, like any of the ones you're using, because just use something. Make some headway and educate yourself. Otherwise, you're going to look at the markets making new highs, and it's going to mean absolutely nothing to you.
And on that note, that's a good way to end.
We will see you later. Thanks for joining us. It's always great having Stephanie here. If you want to tune into the virtual trade floor, we'll be on the radio all day, and then you can tune into the recap and we'll go over the action.